Welcome back, Math 10s. This is our final unit on finance. So our financial literacy unit only has 3 lessons. The first lesson on gross income, that is your income before any deductions are taken off the government or for union or pension plans. Then we're going to learn about what those deductions actually are in our second section. And then our final section, after we take away those deductions, we have something called net income. And that is the actual amount of money you take home to live the life you want to live, to buy things, buy a house, groceries, pay the bills, all that kind of stuff. Okay, so let's dive right into our first lesson here. Gross income. So let's first define what is gross income. So gross income, let's fill this in here. Gross income. It is the amount of money earned before deductions. That's the key line right there. We will learn about these deductions in the next lesson. There are different ways of earning income. Most commonly, and one many of you have probably already experienced, is just a good old-fashioned hourly wage. Okay, paid by the hour, and you can earn overtime and tips depending on the job. And the current minimum wage in BC is $16.75, and that's as of right now, so June of 2023. Okay. And example jobs that might have this really common, many students are servers or things like a cashier. Okay. So those are really common hourly wage, but many jobs in fast food are all hourly as well. So let's take a quick look on how we could calculate. Here's somebody who's being paid less than minimum wage, but this is a bit of an older set of notes. So $16.50 per hour, and they get time and a half for overtime, anything worked over 40 hours a week. That's pretty normal by law in BC. So this person, John, works 48 hours. So we want to figure out the gross income. Okay, so pretty much what is the payment before any deductions? We're not worrying about deductions yet. So we're going to break this into regular pay. Okay, and then we're also over here on the right, we're going to do our overtime pay. Okay, so first let's jump back over to the regular. Well, the first 40 hours are regular pay. So we're going to take the $16.50 per hour and multiply that by the 40 hours worked. All right, put that in your calculator and you're going to get a total pay of $660. Now, over on the overtime side, we still have that extra 8 hours we have to account for. And so how that works is 1650 initially, but it's time and a half, which means 1.5 times more or 50% extra. To do that, we're just going to multiply by 1.5. That's going to be the time and a half part we're talking about. And then, of course, there's 8 hours of that. Multiply those three numbers out, and we're going to get well, first multiply these two. So the time and a half pay, you'll see, is actually $24.75 per hour. And then we're going to multiply that by the 8 hours. And that gives us a total of $198. So to find the total gross now, we just got to add them up. So total gross income, again, gross meaning before deductions, we're just going to add those two numbers up. So we're going to take the 660 that was at a regular pay rate, and we're going to add that to our 198, and we'll get a grand total of $858 on the paycheck. Okay. Now, another common way of being paid that we see a lot of, common for teachers, is a salary. Okay. And this is a set amount that's yearly paid out over a predetermined schedule. Now, technically, teachers get paid once per month for the months that they work, but it is stretched out to be twice per month, as well as we can stretch it out to be paid during the summer. We're not technically paid for working in the summer. We can just take less money during the school year to get paid during the summer. So example jobs, the what I just mentioned is a teacher, but very often many corporate positions are salary. Corporate positions, or something like a doctor or a nurse. Those are often can be paid by salary, but there are hourly versions as well. Now, we got Mary here being paid $45,000 a year. How much is her gross income if she's paid out monthly? So monthly, what we want to see is Obviously, there's 12 of those per year. So we're going to take the 45 grand and we're going to divide that by 12 to figure out her monthly salary, which will give us $3,750. And that's per month. Semi-monthly, semi meaning we're splitting it into two, so twice per month. So that's what this means. So it means twice per month. Now, this is usually on the 1st and the 15th, or the 15th and the last day of the month. And so this will, again, we'll take our 45,000 and divide that instead by 12, but by 24, because we're doing 2 payments per month. And that's going to give us a total of $1,875 per pay period. Now, weekly, of course, all we got to do is take that total this time and divide it by 52 weeks in a year. So we're going to divide by 52 this time, and that's going to give us a weekly paycheck of $865. And now what's going to happen often is you'll get more than just 2 decimal places. This keeps going and going. So we're always going to be rounding to the nearest penny. Okay, so we're just going to look at the 4 here. The 4 is below 5, so we're going to keep it as 0.38. So if we round this, is 38 cents. Okay, and biweekly means every 2 weeks, sometimes confused with semi-monthly, but this means every 2 weeks. Every 2 weeks. And this is very common pay schedule, especially for hourly wage workers. If you have a part-time job, get paid every 2 weeks. So that usually works out to be, so we'll take the 45,000 and we're going to then divide it by 52 divided by 2, because every 2 weeks, and it's 52 weeks. So we're going to get 26 pay periods here. And so that salary is going to work out to be 1,730. And if we round it, we'll get 77 cents. All right. Next common way of being paid is something called commission. Okay, and a most common position that gets paid by a commission probably would either be in any type of sales position, often could be in car sales or real estate. So you're paid based on how much you sell, and there's 3 types. There's a straight commission where it's just based off the percentage of your sales. You're not being paid to be there. You're not being paid to show up. You just get a percentage of your sales. And now there's a combination of salary and commission. So you get a base salary plus a percentage of your sales. You can sometimes think of that as your bonus, often termed. And then graduated is similar to the 2 above, but basically this is a percent commission, but it can increase as sales increase. So if you kind of hit certain tiers or brackets of sales, you can increase your percentage for your bonus to take home. So again, really common commission positions are something like a realtor, or car sales, anything in sales often. Okay, corporate sales, very common. Okay, so we got Jim, Jane, and James all earning commission. So we're going to look at each of these separately as to figure out how much they make. So Jim is straight commission, Jane is a salary plus a commission, James is a graduated commission. And so we're going to check out what all these work out to be. And we're going to assume that all of them had the same amount of sales of $13,000 in the 1 week. Okay, so let's just take first a look at Jim. We'll do these in order. So Jim here is a straight commission of 5%. So all we got to do is find 5% of his sales. So all it looks like this. We say 5% of 13,000. Now, how do we actually do the math here? You might recall the decimals right here. We have to divide by 100 or simply move the decimal over twice. Okay, so the decimal comes here. And we fill in our zeros. And of means we're going to multiply. So we're going to take our 0.05. We're going to multiply it by the amount. And that is how we find 5% of 13,000. multiply that out, and we're going to get a total of $650 is what Jim's going to make on that week of sales. All right, let's jump over to, maybe I'll do Jane and Green. All right, Jane. Now, Jane gets a salary for the week. She gets $300 for the week, but plus a 2% commission. So obviously how we can write this is we're going to take the $300 that she makes and plus, just like it says in the sentence, we're going to plus 2% of her sales. So 2% of, again, 13,000. We're going to translate that. So we keep the 300 here and 2%. We move the decimal over twice to 0.02 times 13,000. Okay. Then you just do BEDMAS. We're going to multiply before we add. So we're going to multiply those numbers. We're going to get $260. And then add those up. We're going to get 560 for Jane. So not quite as lucrative a position. Jane made the same amount of sales, but made less money overall due to a lower commission and a salary. Okay, and finally, let's take a look at James. See if James is in a better position here. Okay, so how James works is a little bit different. He has no salary. Okay, but he gets a 2.5% on sales up to 3,500 and then 6% on sales excess of 3,500. Okay, so we got to set up two commissions and add them together is what we have. So first we're going to take the 2.5% of the first 3,500 right here. So of 3,500. And then we got to add that to the next portion, which is at a rate of 6%, which we see here, 6% on the sales exceeding 3,500. So we got to take away the 3,500 from 13,000. So 6% of 13,000, I'll put this in brackets, take away the initial 3,500 we've already given a commission for. Okay. So I'm going to translate this into a little more math, less of a short sentence. So we're going to move this decimal over. We're going to have 0.025 times 3,500 plus 0.06 bracket. Okay. I guess I could put the, let's put the multiplication symbol. Let's match what I've been doing here. Times, and I'm just going to subtract these numbers. Okay. And that's going to give me 9,500 is the remainder. All right. Good to go. Okay, so multiply, then add. So our first portion of commission here is going to give us, not a lot, $87.50. Okay, that's not very, doesn't sound very good. But the next piece is pretty substantial. The next piece of commission is actually $570 when we take 6% of the remainder. Okay. Add those up and we're going to get a total commission of $657.50. So now we see James is actually in the best spot, walking away with the most cash at the end of the week. Okay, so there's a few other forms that are common. We won't touch on these too much, but we have contract. Okay, so that's just a strict fixed payment for the job that you're going to do. Really common is like home renovations, like a contractor that does different trades. Okay, home renovator. It could be something in digital design, like a graphic designer. Often a graphic designer has a very specific job that they're going to make maybe for a new app, and they get paid once the job is done. Another one we hear about, which is kind of cool, is a royalty. Okay, so this is a payment for a piece of work. This is really common for authors or songwriters, musicians. It's usually based on a percentage of the sales for every book you sell and so on. So really common for a songwriter or an author. And the last one we'll touch on here is called piecework. Okay, which is kind of like a contractor. But we're more specifically talking about a payment based on a number of items, not just one job, but a number of items created or completed. So this could be like a tree planter or newspaper delivery. So let's type those in. Tree planter, you get paid for every tree you plant. Or it could be for picking fruits or vegetables. You get paid by the pound or by the bag or by the bin. So we could say like fruit picking or fruit picker. Another example. Okay. And from there, you're going to move into your practice. So, just to review, we talked about just gross income here and the different ways we can make it. So, hourly wage and salary were our focus for sure, and commission as well. Those are the three most common. And we did some calculations there that you're going to use the same type of math in your practice. Make sure you show all your work because you'll be submitting this for assessment on the unit. See you next time. Bye for now.